In this video, we're going to be breaking down the three only signs you need to be aware of to show that you're ready to trade with prop firms. I've taught many of my students in my Discord and my one-on-one mentorship about these three key fundamentals, and some of them have passed their evals on their first try, their first funded account they've ever approached. And if you're on your 10th, 20th, maybe even 100th funded account and you've spent a lot of money on these evals, you've stumbled across the right video. We're going to be breaking down these three key fundamentals to help you level up your prop firm trading game. The first rule we have on this list, or I should say the first fundamental sign, is to make sure you have a profitable strategy or an edge shown ideally from a sufficient backtest. And if you guys don't know what an edge is, all it is a strategy that gives you statistical advantage in the market. Just like in the game of roulette in the casino world, the casino has a slight advantage against a player that causes them to be profitable in the long run. The casino isn't winning every single hand or every single game, but that small edge allows them to be profitable in the long run, and you need to replicate this just like in the trading world, as if you are the house, but in the trading world. Once you see you have a profitable strategy, for example, a positive expectancy, which means if you combine your win rate and your risk to reward, you show a positive average per trade. For example, a 1-to-1 RR strategy needs to have at least a 5% win rate to actually be profitable and make money from it. Okay, and if your strategy is a 1-to-1 risk to reward strategy with a win rate over 55%, you have an edge. You have a profitable strategy. And if you have sufficient data in your backtesting, which I also have separate videos on as well, showing that that data is accurate, great. You have your profitable strategy. You got this first one checked off. You can get this off your list. Next, the second thing we want to go over and make sure that we have is the psychology and discipline to follow the rules of the strategy and not give into our emotional decisions like FOMO, greed, hesitating on trades, and all the other psychological issues you can think of. Right? Everyone has all these psychological issues, but usually if you work on the first one, which is building your profitable strategy, you're most likely going to build a psychology as you continue to test and see your setups play out in real time in the backtesting as well, since the backtesting is done usually manually. You can also do it automatically through coding, but a lot of people don't have the coding knowledge to be able to code some of these complicated strategies, so it's much easier to go about the manual approach. And over time, just seeing the data on your strategy, potentially watching it while you're demo trading and seeing the setups play out on a live chart, but not actually taking them, or just taking them out on a demo account can help you build the psychology of just seeing the setup play out, understanding what to look out for. And if you see you have a profitable strategy and you've taken a lot of trades, a lot of setups that all look pretty similar with those set of rules, I promise you, you'll have confidence to get in on your trades and follow your rules because you see it in the backtest. The data shows the strategy is profitable. So you best believe you're going to follow it to actually make the money in the live trading, just like in the backtesting. All right. So if not, if you still have issues after that, you want to tackle exactly and find the root cause of the specific emotional decision that you're making. And through this, the best way to tackle it, in my opinion, is through journaling. Reflect. Go over your trades, journal, and see what are the root cause of my mistakes. By you writing out your thought process and explaining what you thought throughout the entire trade, you'll start to see patterns in the common mistakes that you have. And over time, you'll know exactly what you need to tackle to make sure that emotional decision or emotional mistake is out of the equation. And you're purely trading based off the logical side of your brain, you could say. All right. Now, I do have an analogy. If we have time towards the end, I'll get back to it. But if I don't, then let me know in the comments and we'll go over it again. But now the third thing you guys need to have down, the third and probably the most important thing, if you guys don't have this down, with these first two, you still won't be able to actually make the best advantage out of prop firms. This is going to be understanding how to manage risk. Simple, but there's two components to this that a lot of people don't actually understand and don't actually implement. Maybe they do one but not the other, but you need to make sure you have both these down. And that's going to be understanding how to manage risk based on your strategy. For example, understanding the dollar amount you want to risk based on your strategy's win rate or your average RR. So you kind of set yourself up. If you have a high RR strategy, you're not going to really want to enter too heavy per trade. For example, if you have a $2,000 drawdown, you're not really going to want to enter $500 risk per trade because the chances of you winning a trade are really low. For example, if you have a 25, 30, maybe even 40% win rate strategy. So you want to go lower size because if you usually have a strategy that has around 25 to 40% win rate and you're profitable, you probably have an average of like a 1 to 2, 1 to 3, even maybe even higher win rate, averages to reward. And if you risk about 200 to 300 per trade, you're making about 600 to 900 almost reward per trade. So the losses are going to be eaten up by the winners. So you're able to go smaller size, because with these lower win rate strategies, you're most likely going to see a larger sequence of losses. And you don't want to keep blowing accounts back and forth, back and forth. You want to make sure you have that wiggle room as well. All right. Now, I'll actually get more into this in the final part that I have blocked off. But just remember that, keep that in the back of your head. You need to base your risk and the dollar amount you want to risk per trade based on your strategy's probabilities. All right. If you have a higher win rate, obviously you can probably get away with risking more, because you are, let's say you have a 65% win rate with a 1-to-1 or maybe even 1-to-1.5 RR strategy. You can get away with risking more because you're going to see more strings of winners compared to losers. And you can build up that buffer real quick by going heavier size. All right. Now, you might bull some funded accounts in the process, but that's all part of how prop firm trading works. It's not being married to your account and treating it like a personal account. A lot of people make the mistake of treating prop firms like a personal account and being married to the single funded account that they spend all their money activating. And that's what causes them to be stuck in the mix and are the ideal customer for these prop firms to be taken advantage of. So we'll actually go over this in the last point, which is going to be the bonus final tip. Now, we didn't go over B. Based on how to we did actually go based on how the prop. Actually, no, we didn't. Based on how the based on how to structure the prop firms. I meant to say based on how the prop firms are structured. But what I'm trying to say by point B is that different prop firms have different drawdown rules. For example, some have a lower consistency rule, some have no consistency rule, some have a tighter drawdown, some have a bigger drawdown, some have intraday trailing drawdown systems where it goes based off your active P&L, unrealized P&L, and some go based off of end of day. So you have to adapt based on the rules of the prop firm that you're trading. For example, if you're trading a prop firm that has intraday trailing drawdown on unrealized gains, you want to make sure that you're basing your risk on a kind of lower RR strategy where you have less of a chance of your trade going against you and turning away from you after going heavily in profit. Because in a prop firm that's structured in a way where it trails based off your unrealized gains, if it goes heavily in profit and decides to reverse against you, it's not going to be too good, because then you lost a lot of gain and went really deep into the drawdown, even if you didn't lose a lot of money on the trade. Just because your trade went heavily in profit, it increased the drawdown level and then came all the way against you. So if you're trading a high RR strategy on these type of prop firms, you either want to switch to a low RR strategy or implement some sort of trailing stop loss system that kind of follows along to limit the amount of drawdown you have from the peak point of that specific trade or your peak unrealized drawdown. But if you're trading an end of day, for example, trailing drawdown prop firm system, you can get away with pretty much risking any style you want. Just make sure it's a profitable strategy and it's not too crazy on one side. All right. Meaning it's not like a 95% win rate with a like 10-to-1, or the opposite, 10% win rate with a crazy RR. So that's going to be the point, what I meant for point letter B. I was going to say point number B, point letter B. Now, the last and final bonus tip, number 4, if you guys are still watching, it's going to be how to approach. This last sign to show that you're ready is understanding how to approach funded accounts with the cost versus ROI mindset to get the biggest advantage. Now, a lot of people don't actually talk about this, but you're not supposed to be married to the singular funded account that you're trading with. You want to understand the cost and the potential outcome that you can get from trading with these prop firms. We all know you get payouts of $500, $1,200, $2,000, maybe even $2,500 per account trading with prop firms. And the cost to get these accounts compared to the ROI of it and the end result you can get is relatively low. So some prop firms, it costs around $100 to get funded completely. Some cost even cheaper, of downwards up to $50, covering literally the eval cost and the funded account, because some of these prop firms have big discounts and really low activation costs, and sometimes not even activation costs. And the max I've usually seen from an actual good prop firm is about $200, max like $250, nothing really after that. And you want to go heavier size on these funded accounts just so that when you do get a payout, you're getting a hefty payout that's going to cover the cost that you spent on your evaluations and your funded accounts. If you're trading really small size, it's going to take a lot longer to pass your funded accounts and challenge accounts, and a lot longer to get to the payout portion and get a big payout from the funded account. So you're going to be spending a lot of money on the cost of actually buying the eval, buying the challenge, buying the combine. and paying a lot on activation fee just to get a small payout. Whereas if you were to risk a little bit heavier, yeah, you might blow some funded accounts more than if you're trading lighter size and pass through and blow some more challenge accounts, but it's going to be offset by your payout that you're going to get by trading a heavier size. Instead of getting a $500 payout per account, you could get upwards up to $2,000 payout per account because you went heavier. And let's say in the first situation where you only were able to withdraw $500 because you risked very little size, you probably spend, let's say, $400 on evals and funded account fees, so you netted about $100. But if you in the situation where you got paid out $2,000, you probably lost $1,000 in expenses to funded accounts and challenge accounts because you went heavier. So the heavier you go, yes, you're going to lose more towards the funded accounts, towards the prop firms and blowing accounts, but the offset you're going to get on the payout from going heavier size is going to outweigh the expenses, and it's going to lead you in a bigger profit. These prop firms know that a lot of traders aren't going to be going about this approach because they're scared of going big. They're scared of losing the account. So they know they're going to trade small, especially if they're close to drawdown, because they don't want to lose the account. They want to stay married to the account, and hopefully this account is the one account that's going to somehow get them rich. But that's the ideal way these prop firms want you to think, so don't think of it like that. Of course, it's really hard. It's a lot easier said than done, but take it from me, or again, you're going to have to learn it the hard way, but keep this in the back of your head next time you're trading with prop firms or approaching your own funded account. Go heavier size. It's okay to blow funded accounts because your goal isn't to have one consistent funded account. Your goal is to have the max amount of payouts offsetting the cost you spent on the expenses for evals, challenges, and funded activation fees. All right, so combine all these 4 rules together, and I promise you guys, you're going to see a significant difference in your performance in prop firm trading, whether that be from actual pay money, it can be that, or it can be as low as just seeing your executions being a lot better, your psychology being honed in, and through that, your performance is already going to improve on its own. You'll notice, sure, you'll maybe blow funded accounts because you go heavier, but when you do get to the point where you have a payout, or let's say you might not even be trading funded accounts after going over these rules because you'll realize, oh, I don't even have a profitable backtest yet. What is backtesting? I don't even know if I have a profitable strategy, let alone, I don't even know what my strategy is. I don't even have rules for it. So that's something you got to work on. If you don't know your exact rules for your strategy to the T, you couldn't explain it to a 5th grader, then it's probably not, or you couldn't explain it to someone who doesn't know how to trade what you're looking for, then you probably don't have this first criteria down. All right. Once you have those rules down, you want to go and backtest, make sure you have sufficient data showing that the strategy is profitable. Then you can move on to the second part where you're slowly building the discipline, potentially trading it on demo and seeing the setups play out in real time. From there, you'll slowly work on your psychology and discipline of following the rules. And at that point, you're solely going to understand how to manage your risk and size into your positions according to your strategy and understanding the rules of the prop firm, so you know how to manage your risk according to the prop firm structure as well. Right? Once you get all 3 of these down, the last and final point, which is probably the most important, but it's the last you should worry about, because you shouldn't worry about this one if you didn't get the first 3 down, which is understanding and having the cost versus ROI mindset to get the biggest advantage out of these prop firms. All right. So go heavy size, have the profitable strategy shown in your backtest, focus on building the psychology and discipline, following the rules of that strategy, that profitable strategy that you saw in the backtest, and understand how to manage the risk according to your strategy's statistics and based on the structure of the prop firm that you're trading with. Combine all 4 of those principles. I promise you guys, you're going to improve significantly in your trading performance with prop firms. All right. Let me know how it goes. If you guys are stuck on any of these points or any specific part in your trading journey, let me know in the comments what you're struggling with, and I'll get to it as soon as I can, or even make a separate video if I find it useful for other people as well. All right, everybody, peace. I'll catch you guys in the Discord as well. Take care.